I'm Perianne. I'm the founder and CEO of the Digital Chamber. We're a trade association that's advocating for the digital asset and the blockchain technology industry, headquartered in Washington, D.C., and we're focused on all the public policy issues impacting our space. Today on this session, we'll be talking all things tokenization. We've got some of the leaders across the tokenization space who are working in a number of different areas around the world, different types of tokenization applications, from financial services to stablecoins to non-financial services related applications, and we'll be digging in. We have Denelle Dixon. She is the CEO and the executive director of the Stellar Development Foundation. We have John Nahas. He's the chief business officer of Ava Labs. Walter Hessert, he's the head of strategy at Paxos, and Staci Warden, who is the chief executive officer at the Algorand Foundation. All right, so we're just going to jump into the discussion. There's a lot to go over. There's a lot to cover. The first thing I really wanted to address is just kind of where we're going with all of this. Tokenization is often hailed as the future of finance and beyond. And maybe we can just go in order here. But where do you all see where do you see the industry going between now and the next 5 years? Where is the biggest focus of uptake for tokenization?
Well, I think everything is being tokenized. I think it's really interesting to see. We have money market funds on Stellar. We have bonds. You have just U.S. dollar-backed assets all over the world. We have, I think, 46 different assets in different parts of the world. And I think tokenization is going to move to, you got to tokenize bank deposits. You can tokenize just like the ledger that you have internally. You don't even need to issue like a stable coin or an asset. You can just tokenize your ledger and put that on to make it work really seamlessly with the systems that you have. So I think it is sort of like the powerful piece of this technology, and it delivers a ton of value to consumers and to businesses all over. I think importantly, it also helps with this technology from the business side, because it actually creates an opportunity for the technology, if it's open and it's public, to improve over time, so you're not sort of stuck in this notion of dealing with antiquated software, which I think is amazing for businesses that are doing it.
It's great to be here and great to be on stage with everybody. So at Ava Labs, our mission is to digitize the world's assets. Simply put, tokenization. And the Avalanche blockchain was specifically built for that. So we're really proud of the tokenization efforts that we've had across a myriad of different industries and verticals. But the thing that I think that's going to take tokenization mainstream and the topic of the conversation today, we have to look at the way tokenization needs to go mainstream and reach the market. And up until now, and the crypto industry is very much always focused on building crypto products for crypto users. To take tokenization mainstream, you need to broaden that sphere. You need to bring in different industries, different use cases. So with Avalanche, you have the ability to not just launch applications and assets on chain, but also launch your own dedicated blockchains. So Avalanche is a network of interoperable blockchains. And if we know anything about traditional finance, about enterprises, about the innovation happening in the crypto world, you need specific blockchains for that. You need interoperability for that. So we've been very proud to work with KKR on tokenization. We have a myriad of stable coins, whether it be USDC, USDT, EURC. We have BRZ from Brazil, QCAD, a lot of different stable coins to really, which is one of the best tokenization use cases for global FX. But you have traditional assets across, you have a ton of different companies. I know we'll get to this in a little bit, but the main point is to take tokenization mainstream, you need to have the infrastructure and the fundamentals there to allow that. I know some of our colleagues here, represent their own chains. We believe that we need to proliferate chains that have dedicated use cases that could be regulatory compliant or jurisdiction compliant or use case compliant or able to really scale for the use cases to really take tokenization mainstream. And really, what is tokenization? It's the digitization of assets, right? A lot of people remember the days when we talked about taking things online, right? That was when we made things electronic. Well, tokenization essentially is digitizing assets and digitizing value and putting it on chain.
At Paxos, we're building a tokenization platform as financial market infrastructure to enable what we think of as our mission, which is the instantaneous movement of any asset, anytime, in a trustworthy way. And that's one of the many things that tokenization enables. And we often track a metric at Paxos, which is tokenized AUC, how much tokenization has occurred out in the world so far. And it, to say it's small is really an understatement. There's 700 or 900 trillion dollars of financial assets in the world, depending on how you count them, what you include. And we're probably in the couple $100 million of tokenized assets, most of which are US dollars.
That includes stablecoins, to be
Stablecoins.
clarified.
And so when we think about what this could look like over 5 years, obviously nothing in this industry is linear. And so we think there's just enormous opportunity. And where we've seen the most adoption, the kind of asset that's furthest along in its adoption curve of tokenization, it is stablecoins. It's tokenized US dollars. And we expect that to start to move, that to accelerate. And so we'll see trillions of dollars of stablecoins. And that is going to enable and lower the barrier for other types of assets to start to move and really grow in the market. And those are going to be commodities, securities, all different types of assets. And I think we're going to make a lot of headway in the next 5 years.
So I am in crypto to try to absolve myself from my TradFi sins. I spent a number of years at the NASDAQ. I ran the 2 microcap markets for the NASDAQ. And then I was 8 years at JP Morgan. And traditional finance, you probably don't hear this analogy too often, but it's like crochet. So it's beautiful on one side, but when you turn it over, it's like an absolute mess of intertwined things, And so what TradFi has you do is never look like on the backside, right? But part of the problem in TradFi is that there's a difference between clearing and settlement. Clearing is when you send the messages about what you're going to do, and settlement is when the money actually changes hands. And blockchain is the solution to that, right? Clearing is settlement. It's instantaneous. And so that nirvana, to me, and I think we can get there in 5 years, is that you have regulated institutional grade fiat exchanged for tokenized assets on chain. Like that will be, it's a small step for crypto, but it's a huge leap for traditional finance, right? And so we, at not to make this an advertisement, but at Algorand, we just tokenized worked with Aberdeen to tokenize an Aberdeen money market fund. Now, we're not there with this, right? So Quantos, which is a digital euro, it's fiat, it's not a stablecoin, it's a digital euro regulated by the Dutch central bank. And then there's a company called Archex, which is regulated by the Financial Conduct Authority in the UK. This Archex takes Aberdeen money market fund, tokenizes it, and holds it. So Aberdeen is not yet issuing digital assets on chain. That, I think, is where we need to get to in the 5. And then, of course, we then, so the Algorand Foundation did the first transaction. Of course, we bought, I think, 100 million of Aberdeen money market shares. We have the tokens that Archex minted. And now we can do atomic swaps. And we're doing our first one this week. The wallet for that initial transaction was DXAFL. No, just kidding. But you can look it up. It's on chain, right? Like you can see it really happening. And so then we'll do atomic swaps. And so you can trade atomically. And again, this is instantaneous, zero counterparty risk kind of settlement. And I think that's where we can get, and again, we don't have this assets minted directly on chain yet, but I think we can get there in the next 5 years. Now, if you allow me to be a little bit more like woo-woo forward thinking, out more than 5 years, there is not a difference between cash and assets. Cash is an asset. So why couldn't we take the tiniest little sliver of that Aberdeen money market fund and use the little ownership that I have of it and buy a cup of coffee with it, right? Why can't my cash always be earning income? Always, always, always. And the miracle of the blockchain, this can happen. Your tiniest sliver of an asset can always be working for you, and you can buy a cup of coffee, though, when you want to with it.
I love that quote, the miracle of the blockchain. And this isn't magic. This isn't a spiritual, technology revolution. This is a technology upgrade for the financial services system. But we're also seeing many different applications outside of financial services. And that crochet example, I think, is kind of emblematic of the need to have that technology upgrade and the financial services spectrum. And we've been talking about tokenization as a community at the Digital Chamber for many, many years now. There's just been so much talk about the potential of this technology, how it can, how bringing real world assets on chain will have so many benefits from efficiency, transparency, streamlined compliance. You can address so many issues we see in shadow banking, like that wouldn't even exist on chain. So to me, the benefits are clear. And for me, it's very clear that this is the future of the digital economy. But mainstream adoption, I don't know if it's fair to say it's been slow, because this technology is like 15 years, Bitcoin's 15 years old, right? So we're still, I think, in early days, but I think a lot of people are saying we haven't seen anything, like we haven't seen the type of mainstream adoption we would expect to see. Do you think that is fair for either of you? Do you think it's kind of fair to say mainstream adoption hasn't taken off? Is this kind of a typical length for a tech cycle? And then what needs to happen to make the mainstream adoption of various tokenization use cases happen? And how are you guys addressing that?
I think that if you think about the web, and I was involved in the early days of the web is basically right now, maybe like, don't think about the number of years it's been around, but like in its 20s. So outside of its teenage years, moved into its 20s, and there's all this, you've seen all the challenge and opportunity on the web. I feel like we're still in like we're not an infant anymore, but we're in like we're
unruly preteens.
Yeah, we're very we're there. And so I don't think it's crazy that we haven't seen it. I mean, the difference in terms of this tech stack and what happened with the web is that we have the secondary assets, which created its own sort of frenzy. And so it was a lot about, look at this great tech, and then the secondary assets. And there wasn't a lot of UX and UI designers that came to actually make the tech user friendly. We're seeing that now. So you're seeing a lot of really awesome development on making it so that you don't really have to know that you're using blockchain. And I think that's the key to mainstream adoption. We see already Franklin Templeton has a money market fund on Stellar. It's $460 million in that. People are using it to be able to, have their assets on chain and to hold them there. It's all on chain. It took them from 2019 until 2021 or 2022 with the SEC to be able to make that happen, though. So these are things that are challenges with regulation depending on the country that you're in to make that go. And so I think that we're in the right spot, but now we just have to focus on those uses that actually are going to take it to the mainstream, which is putting it in the hands of individuals that might not be crypto native, that might not really care. One of the things I used to always say is, does anybody really know when you're using HTTPS? The answer is maybe some of you, but hopefully not all of you. And that's good, because you're using it every day. And that's a really important part of the tech stack. But we've talked so much about tech and not about the uses for so long. And now I think we're getting out of that, it's blockchain, to, it's this really cool piece of technology that can actually, you can use it to be able to get cash on Stellar. You can get cash all over the world through MoneyGram and the relationship we have with MoneyGram. And wallets are doing this every day.
And people don't need to know they're on a blockchain-based app.
They're on a blockchain. And I think that's a really important part of mainstream.
Yeah. I mean, go ahead, please. To be fair, so I think the biggest problem, and I'll give you what I think makes me bullish, the one thing that makes me bullish. The biggest problem, to be fair, is that it's very hard to move first. I mean, the financial services industry is so interconnected that, the whole thing kind of needs to move together. So I don't think I need to say anything more about that. That's pretty obvious. The thing that makes me bullish, though, about them getting it together to do this is that here's the beautiful thing about people in finance is that they love to make money, and
who does?
You can save a ridiculous amount of money through mostly the clearing and settlement piece of this. And bankers, at least I know at JP Morgan, they will figure out a way to do that, right? So if you look at a typical securitization vehicle, you set up an SPV. So let's use mortgages. You get all the mortgage payment. And then of course your investors are laddered, right? There's a waterfall. The most conservative investors at the top, the ones that take the greatest return at the bottom. You get all these mortgage payments in every month, right? And then you send it to a calculation agent. The calculation's like, this guy gets this guy gets this guy da. Okay, they take their basis points off the top for doing that. Then you send it to a paying agent. The paying agent sends it to a prime broker. It all has to be these are like calculation agents. I mean, no offense to any of the calculation agents in the room, but this is like spreadsheets, right? This is not very complicated. You can, this can all be done by smart contract. This can be set up in advance, done by smart contract on a blockchain, and you are saving 30 to 40 basis points. Just to do the math for you, that's 30 or 40 grand on $1 million mortgage, right? Like that's real money for households and for the banks. And to be able to cut those costs off, they will figure out, and the blockchain is the answer for them.
I think it's important, though, to mention that the big banks that have these potential advantages and benefits in tokenization and broader blockchain solutions also see threats. And that is maybe one of the contributing factors to this kind of set of antibodies that didn't really exist in email adoption, which is, regulatory, it's policy.
They're in the denial phase of grief. They just need to work through the 5 phases of grief.
Well, you did have with VoIP and completely, taking the phone carriers charging long distance fees, that business went to zero. So there were, a number of...
There are some examples of that for sure.
But this is financial services.
Just to say that one of the things that is still limiting the broad adoption is the regulatory overlay and the regulatory environment.
See, I agree, but at the same time, I think there's an issue here. I think for a long time, crypto people were building crypto products, like I just said. So they were like, if we digitize something or make it into a token, it's automatically going to be great. And the traditional finance players said, oh, if we do something in the crypto world, we can target these people. And they were talking over each other.
Yeah.
So there wasn't really use cases that would work. And I think for tokenization to go mainstream and where we will go in 5 years, because I'm not bullish on today. I am bullish on 5 years from now, because you need to build that fabric or that crochet on the back between many different assets. So we've tokenized fiat with stablecoins, multi different kind of currencies. But that's just one thing to do. It goes back and forth. It goes between people. But you need to create an ecosystem or an environment with many different assets and many different use cases for people to plug in, whether they know or they don't know that they're on blockchain, that they can use this cash, that they can use this stable coin for. So like with Avalanche, I mentioned we have the KKR. We have Homium that has shared appreciation note for HELOCs. We have Clearpool with on-chain credit. We have Intane with asset-backed securities. You need to start to build a world where not just the fiat or the on-chain, real-world assets, but also real-world activity, your time, your attention, these things that could be digitized and hold value, start to flow. Yeah. So there's different verticals. My team has different verticals, but it's not enough to just tokenize cash or tokenize equities. You need to show how the digitization of value and these assets across a plethora of different use cases can start to interact and start to be tradable and start to move between industries. So in essence, we need that tipping point. We're not there yet. We're working on ways to make it easier for people to get into this space when we've, I think, traditionally made it very hard. I think we have an elitism problem in this industry where we like to be the in-group, out-group. I think that's starting to break and people are starting to come in. But people need to come in with assets, right? Like, oh, if I could get a HELOC faster and cheaper, if I could move my money faster and cheaper, if I can swap something for something else that previously I couldn't. We're seeing this with gaming right now. Avalanche, because of our unique architecture, we have dedicated layer 1 blockchains for AAA shooters. An Xbox and PS5 game called Off the Grid is going on now. They're having test players for like 30,000 every week, doing hundreds of thousands, if not millions of transactions. Every in-game asset is going to be tokenized. That's value that the players own and now will have ability to move. So you start to see when different assets across different classes get digitized and they become at some level tradable or fungible, that's when so it's going to take, I think, the 5 years. We're not there yet, but I think the infrastructure is being built. I'm really excited about the ability that Avalanche has with this multi-chain architecture to really take it to the next level.
John, I think you make a good point that we can't think of the future of the digital economy, this tokenized economy, in silos. It really has to be a comprehensive, offering for people to not just buy a stable coin and then have a stable coin. What do you do with it then? So that's a big piece of it, is just ecosystem development. I think, Denelle, you make a great point that UX, making things user-friendly. I think in order to bring this technology to the people of the world, it needs to be accessible and usable for the people of the world, and that includes people outside of the tech community. And then, of course, regulation. We're all very familiar with the challenges there. So maybe we could just spend a few minutes digging into some of the policy conversations. And of course, in our role at the Digital Chamber, we're helping lead a lot of those discussions, at least on the federal level here in the United States. And it's certainly one of the biggest barriers we hear from companies all across the country of we don't have regulatory clarity, we don't have regulatory certainty, we have a very aggressive enforcement posture, we're seeing regulation by enforcement, and all that can have a huge impact on how businesses can build and develop and invest. So right now, Congress is working on creating the regulatory framework for this community, and all of you are involved in those conversations. So what is most important to get right in the regulation? What's the most important thing you all, from your own personal perspectives, are focused on getting done? And how do we make sure the policy is going to create an environment that protects consumers, but also allows for innovation to grow here in the United States?
Well, I think, we talk about tokenization, but if we think about what is actually happening, you have generally an entity that is going to, control some contract and is going to custody or hold control over an asset and then enable that into a blockchain environment. So first thing we need regulatory frameworks that are tested and trusted for the entities that are doing that tokenization. We've found that in stablecoins at the state level. Paxos has been issuing regulated dollar stablecoins with prudential oversight from the NYDFS. Now we have prudential oversight from the FSRA and the ADGM and from MAS in Singapore. And so that has been a long journey to get to that accepted regulatory framework. And there's still an enormous amount of work to be done there to be able to create that sort of certainty in the U.S., at least at the federal level. For tokenizing other types of assets, if we think about these ecosystems and just think about how many regulated entities are out there in a compliant way, issuing assets into open, permissionless, ways, not many. It's really doesn't go far beyond Paxos, Circle, and maybe a couple of the new stablecoin issuers. And we need the regulatory frameworks to be able to do that issuance and to be able to then provide the distribution of those assets in compliant ways, or else we really can't grow the ecosystem. So I think that is key, regulatory frameworks for issuance. And it's important that it happens in the U.S., and in absence of it happening in the U.S., we are seeing other jurisdictions step up to provide those clear frameworks for that issuance.
I think in the U.S., we already are seeing two bills, and this pending. One's on market structure, which is crucial for what you're talking about, tokenizing these assets and leveraging them all over. You can't have asset issuers be concerned about whether those assets are going to be labeled securities. And so the market structure piece is a really important part. It's obviously, there's Senator Lummis and others have really been trying to push this through. We'd love to see that happen by the end of the year. So that's a really important part of that. But then the stablecoin piece is also having federal jurisdiction, but also allowing space for states like New York, like Wyoming, California, who have already taken steps to be able to issue these assets. So those are, I think, creating regulatory framework that's not going to eliminate any innovation at the state level as well as at the federal level, but also leaving room for what's happening outside the United States, which is pretty remarkable. And you see these assets being leveraged all over, and it's really, really important to be able to maintain that kind of growth internationally as well as domestically.
I think it's important, though, to look at two things. Like I mentioned earlier, right? Assets going on-chain should be viewed in the same way that they were a decade ago going online. So that's one thing that I don't think we as an industry are explaining well to the regulators. People in our industry like to yell at the regulators. I don't think that's the best way to work with someone who's going to potentially regulate you. But beyond that, I think our industry can show ways that you can work within the existing framework. So I'm really proud of the work we've done. And you guys mentioned the MAS and other jurisdictions. Avalanche spun up some chains last year. We did work with the MAS with JP Morgan and Citi and ANZ and all these financial institutions that were comfortable doing something on a private permission chain, but that was on a public network, a public permissionless network. So we're trying to bridge that gap between what's previously existed on the private permission side, which really was in a vacuum. But a lot of these institutions are okay doing things in a private permissioned way that has connectivity to a broader public or public permissionless manner. We have, SK Planet, one of the largest conglomerates in Korea, has a nationwide loyalty and reward system. And to access it, you have to be KYC'd. So they have a permission chain that's for public use. And to access that chain, you have to go through KYC in the wallet and do that. So you have kind of this fabric of private permission chains with their own assets based on their own regulations. Permission public chains on Avalanche that are, permissioned at the regulatory or jurisdiction level. Republic has the Republic Note, which is an index of their private equity like Carta and SpaceX that you can buy, but you need to go through KYC and accreditation to buy that. You can do that on that chain. And then you can have interoperability between that and the public permission list stuff. So I think crypto people oftentimes only look at the public permission list. I think the benefit that we've brought to the market, and that I'm really proud of, is that we can show that you can start private permission. You can start working within the regulatory rules that exist today that we tend to think are restrictive, but they're restrictive because they don't fit into existing blockchain infrastructures. But if you could build your own blockchain infrastructure to adhere to the regulations that exist based on your jurisdiction or your use case or your need, you can start there. And once compliance or regulation changes, you can graduate into a more public and a more permissionless way.
John, you've said that very eloquently. Sometimes I like to say the private and permissioned blockchains is kind of like getting in the hot tub, and then getting into the ocean is you're in a permissionless network, but you explain that a lot more eloquently than I do. So we talked about regulation and a lot of the challenges there. We've talked about what are some of the biggest barriers to mainstream adoption. I really wanted to just dig into the non-financial tokenization use cases and applications. We are seeing financial services probably move first. We have, multi-trillion dollars worth of stablecoins being transacted annually. So, we have a real market with stablecoins. Let's talk about what's happening in the non-financial services space. Staci, do you want to go first? What are some of the things you're proud about or excited about?
Yeah, sure. I will say that you can have KYC'd business on Algorand. Just go on, off, from, allowed, not allowed, not allowed. You can do that wallet by wallet. But anyway, so let me say a couple of things. One is, I guess this is still finance, but prop tech, of course, is really interesting. And there's a very successful company building on Algorand called Lofty AI. They set up every property like a DAO. So you buy in for as little as $50, a rental part. These are all rental income properties. You buy into the property. You see all of the information that you need to see about this property, and you manage that property with the other small investors in that property. And, I sort of watched this company. I have seen them fire a property management company. I have seen them decide to give a woman who had, I think she was laid off or she had some personal issues, to forgiveness of her rent payments for 3 months. So they run these things. And because it's web, and so if it's a $100 property and you have invested $10, you get 1/10 of the rental income stream. Do you get it at the end of the month? No, this is Web3. You get a daily, almost liquid, continuous income stream from these properties. So I think this is pretty interesting. I would argue that's still finance, of course. But another example, if you will allow me one more,
Sure.
is there's a company called TravelX, and they look at the relationship that you have with your airlines. There are a lot of relationships that you hate commercially, but I would challenge you to find one that you probably hate more than with your airline, right? Like if you buy a ticket on a trip, you don't want to go on the trip. Like, what do you have to do? You have to make sure you go within 1 year on the same trip. You get penalized. You rarely get all your money back. It's very, confrontational kind of relationship. It's not good for the airlines either. So this company, it's an Argentinian company called TravelX. They started a secondary market in airline tickets. So these things are NFTs, and if you are a freshman in college and you buy a plane ticket home for Thanksgiving all 4 years to save money, you do it all up front. Then, you meet a guy and like your software, you don't want to go home for, Thanksgiving. So you can sell your ticket on the secondary market. And if you are a frequent flyer, then you can all of the perks that you get can transfer with that ticket. Now, they started with Flybondi, an Argentinian airline, and they've now Mexican airline as well. But if you go to like the Flybondi website, there is nothing there about Algorand. There's nothing there about TravelX even. It's just a secondary market website for airline tickets that you can buy from each other. Like, this is the kind of stuff, it's not fractionalization, which we talk about with tokenization often. This is tokenization and creation of markets where a market did not exist at all before. And I think that kind of thing is super exciting.
We've seen phone service in the global south, those kinds of minutes being put and tokenized, which I think is super cool to see that. We've also had real estate, but not real estate that's focused on, it's real estate that is looking at allowing ownership of the fractionalized ownership. So not so much like they're gonna own a fractionalized interest of it. Red Swan's a company that's doing that all over the world on Stellar, which I think is also super interesting. Carbon credits. Like, there's a lot of really fun things out there. What you just talked about is super cool in terms of the gaming. I love that. Like, that's non-financial, and that's really cool that you guys are seeing that. I've always said that gaming is like a way to really get to mainstream usage with this technology.
That type savvy demographic, right? But I think, non-financial, but at the same time, what I think tokenization is eventually going to lead to is almost the financialization of everything. Mm-hmm. So, we have a wine fund, like tokenized wine. We have Swap, which is tokenizing like classic sneakers. We've done a bunch of things. TYB, Try Your Best, that was launched by Ty Haney, is doing rewards and loyalty with like Glossier and Sephora and all these lifestyle brands. I mentioned South Korea's nationwide loyalty service. UPTN is on chain with us. The California DMV recently tokenized 42 million car titles on their own private blockchain on Avalanche. So we'll see where that grows. If there's multi-state adoption, maybe we don't have to wait in line at the DMV anymore to do fun things. So you start to see all these things, but all these, what's exciting to me is something that hasn't been built yet. And I don't know what it is, and I don't think any of us do yet. Because everything that's been tokenized is something that exists under the sun already. What I'm really excited for, I would love to support, is the builders that are going to use this technology to build new use cases, new asset classes, new things that could be tokenized that previously weren't before. So like your attention, your time, remedies on Avalanche, they have your private health records with your private identification. They hash it on chain. So maybe you being able to give your data, your health data, anonymously to a developer to build an application, people can start to take control of their value, right? In gaming, that's where it's happening. So there's a lot happening, but I think there's so much more that can happen that really we haven't touched the surface on yet.
I think that we used to talk about it in the Web3 world. And the Web2 world was like an API to you. That'd be a really cool thing where you can like tokenize all your, then here's my API and I'll give you certain things.
I'll tokenize myself, tokenize my attention, right? Like you could start to
tokenize John. Get a piece of John.
I'll take a piece of that. I'll take a piece of that. No, but you're bringing liquidity to things that aren't liquid. You're letting people that couldn't participate before participate because they're in smaller sizes. Households people that aren't accredited investors, they typically have no access to, say, rental income, right? And to be able to give that, and then when to bring liquidity to an illiquid rental property, it's a win-win.
Let's build off of that. You said something that I thought was really important, is we're bringing access to something people before did not have the ability to either invest in or access. Stablecoins, I want to do a focused conversation around stablecoins because I do think today this is probably the most successful application of tokenization in the market, kind of depending on the data that you're looking at. It's anywhere from $5 to $8 trillion of transaction volume annually. This is real. And 99% of that is dollarized, which means the United States dominates the financial services or the stablecoin market. Both Stellar and Paxos, you guys are very focused on stablecoins. How is this technology bringing dollars to people who would not have had access to it otherwise?
That's one of the huge use cases today of stablecoins. And if I look at the title of this panel, which is Taking Tokenization Mainstream, it's going to be stablecoins. Stablecoins will be what take tokenization mainstream, and it will continue to broaden out across other asset classes. But having that dollar liquidity is going to enable other tokenization, and the dollar demand today through stablecoins is extremely high and growing every single day. And one of those key use cases is access to dollars for people in the world that just did not have access to dollars before. And if they had access to dollars, maybe they only had access to physical dollars, maybe they have access to some digital service that's, kind of one service daisy chain on another, and it's very expensive. And it's hard to know like where their security and where their ownership is. And so today, if you have access to the internet, you can hold $1. And if you're doing it through an issuer that's regulated, it's basically holding $1 with the Fed. You're holding it with backed by T-bills kind of managed across a handful of large institutions and with short-term liquid federal government-backed securities. And so,
Right, though, because you don't have access to the Fed discount window, and I think that's a big important step. I mean,
I think that would be a very important step in moving the industry forward and getting us to going mainstream. But today already, it is just such a step above what these people in different parts of the world are able to access. And so when we look at it through the lens of a U.S. citizen, we see certain value propositions. But when you look at it from somewhere else in the world, it can be completely different. We've powered stablecoins for big firms like Mercado Libre, one of the largest technology company in Latin America, largest e-commerce platform in Latin America. And what they're doing is now just making it very simple for their couple 100 million customers to be able to access, hold U.S. dollars. And that is only going to continue to grow. And so they're building the functionality to make it seamless to set and receive it. We're putting it on blockchains that make it efficient and cheap and fast for them to be able to send that. And when that happens, it starts to replace different payment flows that they might otherwise use some digital dollar or some other currency for. And so the access can't be overstated. And it is one of the most powerful things, and it's one of the reasons that stablecoin will continue to lead, is just because it has such an important value to society today globally.
I think that's what Paxos and the work that they've done, particularly with the New York DFS and elsewhere, to be able to make these things available is really important. We see on Stellar, our mission at the foundation is creating equitable access to the global financial system. We don't pretend that we can actually get to that financial inclusion layer, because that's not our layer, but we actually can get to the access layer. So what we've done is really focused on getting stable coins and stable assets on the network, so and then also those on and off ramps. So the MoneyGram relationship that we have in 480,000 locations globally is crucial, because when we sit here, we don't appreciate how much of the world does not have bank accounts, does not have credit cards, but they can cash in at MoneyGram, and then that transfers into a USDC asset, and then they can send that asset anywhere in the world instantaneously. We're doing this in Ukraine with the UNHCR. People are getting aid from the UNHCR within 3 minutes, and that includes the download of the wallet. This is how you get to mainstream, and this is how you change the world. This is how you create access and then ultimately financial inclusion.
One of the things that I see very promising in the data about the people who are using stablecoins outside of the United States, and we're seeing this in Latin America, we're seeing this in Europe, we're seeing this in African nations, in India. One of the number one use cases of people using stablecoins outside of the US is to save money in dollars. And that's a really powerful thing, because one of the criticisms is that, oh, it's just speculative, this is just crypto, this is just powering more speculative crypto behavior. But that is not what the data is showing. And so I do believe there is a national security argument to be made that stablecoins are bringing dollars to other places around the world. That's extending the usage of the dollar, and it's helping preserve the dominance of the dollar for future generations. We are just about out of time, so I'm going to let each of you give a quick closing thought. What advice do you guys have, either for businesses or policymakers, about the future of tokenization?
I think we have to focus on the outcomes that we want to see. And once we focus on the outcomes, policy becomes a lot easier, business becomes a lot easier, and using these stable assets to get to those outcomes is a really cool way for us to think.
Well, we'll come back to you, John.
I made John speak.
Tokenization is coming. It's going to just continue to grow. It's not going the other direction. And there are ways to start to adapt and start to make your enterprise ready. You don't have to be PayPal launching their own stablecoin. There are ways to start to use the digital wallet technology to enable it for corporate purposes or for your customer purposes. And the more and more you can start to work through that now, the more prepared you'll be as these assets start to flood on chain.
My advice, I guess, to regulators and U.S. policymakers in general is that, to your point, despite our best efforts to kill it, we are still 99% of this market. People want to hold the U.S. dollar. We talk about, if I live in Washington, D.C. I have lots of policy friends, and I say, you don't like white privilege. You always talk about the problem of white privilege. Well, what you're talking about when you poo-poo stablecoins is dollar privilege. We think about this from a position of dollar privilege, but for most of the majority of the world, the ability to hold U.S. dollar assets, to your point, is life-changing for people. And so we need to get some clarity around having stable coin, but also, Quantos, it's a digital euro. It's not a CBDC and it's not a stable coin. It's a digitized euro. And we can have the same kind of thing in the United States, a digitized dollar that can unlock just enormous amounts of value. So I think we need to embrace the opportunity. That would be my advice. Embrace the opportunity and not just be so, knee-jerk negative about stuff. But otherwise, I just want to say that the algo is not a security, and I would like to conclude that.
John, any closing thoughts?
Just say, something I tell builders that build in our ecosystem all the time is build things people want. Like, I know that sounds obvious, but that's not always the case. With emerging technology, people get a really great idea. They think, but people will use this. That's not always the case, right? Like, why do people need this means what problem are you solving? So first, try to solve a problem and do that. Secondly, I would say to the regulators, look at what is being done in a compliant way. Look at what has been done. And I think we're leading the way on a lot of use cases in that regard. But I think both from the crypto world and the traditional world, there needs to be a little bit a better communication in terms of how we can really bridge these two things better. I think the crypto native side does breed the innovation that forces the incumbents to move into our world. Without that crypto innovation, you don't have that. But I think there's a lot of talking over each other where crypto people just think if you tokenize everything, it'll be magic. And then, on the institutions, they do think, if we get the crypto people involved, it'll be cool. But that's not always the case. But I think we've come a long way. I think we have a long way to go.
I think adding on the point that the U.S. today, or 99% stables are dollarized. The United States is clearly dominating this space today. I think my main message to the policymakers is just don't mess it up. We're already winning. Please help me in thanking each of our panelists.